Right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today I got a whole bunch of good crypto news stuff for you today. Apologize about yesterday's video. I know it was really short, but there wasn't really a lot going on and I had a lot of stuff to do. So I just slapped a couple things together. But today it's going to be a nice full episode. Hey, everybody's rejoicing and the hands are doing magic fingers. But the first thing I want to talk about is Bitmain's awesome possum, because everybody knows Bitmain's my favorite. Everybody knows it. Their 7 nanometer technology, enhanced mining performance of the Antminer S15. So the S15 is going to be out soon, I guess. Selling on November 8th. And, shipping, I don't know, 10 years later, after they're done using it and taking all the profits. Oh, Bitmain. Oh, it's like a 90s TV show where it's just like, at the end of Full House, somebody's like, oh, Joey, to carry you home. But, so you might be like, hey, what's the specs of the Antminer S15? They don't show them. They don't show them. You're like, hey, what does it look like? They don't show them. You can't. I'm clicking, it doesn't work. So nobody knows what the specs are just yet. However, so I checked out some articles and stuff, and there's some fairly good speculation of what it's about. So the company claims that the new 7 nanometer miners possess industry-leading hash rates designed to mine with the SHA-256 algorithm. I wonder what other one they would be mining. Two models, Antminer S15 and T15, will be offered and available for purchase at 1400 GMT plus 8 this Saturday, November 8th, according to its official announcement. So basically, November 8th. While no detailed specs or price of the new miner have been revealed yet, there'll be something outrageous, I'm sure, just like the Monero ones that were $12,000 on release. Some of you probably don't remember that, because it was $12,000 for like 2 days until they were like, oh wow, nobody's buying these, let's bring them down to 8,000. And then I think like 4 people bought them, and then it went down to like basically free. Get a free Monero miner with every purchase. So according to Jihan Wu, CEO and co-founder of Bitmain, the new ASIC accelerated chip, the BM whatever chip, uses the world's most advanced semiconductor manufacturing technologies, integrating more than 1 billion transistors, and is optimized for maximum efficiency. So an energy hash ratio of 42 joules per terahash, whatever that means, because we don't know how many terahash it is. However, looking at some of the other miners in the industry at the moment. So the Avalon A9 is 26 to 30. The GMO is 33 terahash. The Innosilicon T2T is 32. The EBIT 11 is 44 terahash. And the What's-A-Miner M10 is 33. So some of these are like big server ones where you have to actually have like multiple outlets, and like there's just like, it looks like basically 4 or 6 of them stacked and you get them. So that's basically why they pull that much. But so the Antminer S15, we could say, is probably going to be 30. Usually with Bitmain, admittedly, the only thing I can really admit about Bitmain is that they typically have pretty efficient miners in terms of their, wattage per terahash, yada yada. So I'm assuming it'll be like 30, maybe 35 terahash, but also at the same time pretty efficient. So we'll have to see what the exact specs are, but it just goes to show that just because the price of Bitcoin is down, these miners are still coming strong. And even at like 30 terahash, 40 terahash, it's still only like $10 a day kind of thing. They really don't make that much at all. And that's just because, Bitcoin's way down and the difficulty's way up. So if Bitcoin went back up in price, you'd be making a little bit. But unfortunately, with the crypto world, the bull markets are actually really short, usually only a couple weeks at a time. So these are just never really that profitable. They're more of a pain in the ass, to be totally honest. And pardon the French, but they are. Plain and simple. They sound like a vacuum cleaner. They're about as loud as one, and take a lot of power, take a lot of area to set up. You either need a whole room in your house. You can't just have these in your living room, be watching TV, unless you're crazy and you think you can handle that. You need a basement or something like that to put them in, and just not everybody has that. So it's kind of difficult to use these overall. So we'll have to see what the exact specs are soon, because for some reason they're like, let's not release them until everybody starts buying them, and then we'll release them. So maybe they're actually really bad. Who knows? So next article here is that Ripple overtook Ethereum again to become the largest altcoin by market capitalization after gaining 18% in 24 hours. So data from CoinMarketCap confirms the latest switch around of the top two altcoin assets, repeating a pattern that has occurred several times this year. So several times Ripple has overtaken Ethereum. And as you can see in this picture, for some reason they decided that they would take a picture of Ripple just below Ethereum, even though they're talking about how it overtook Ethereum. But it did. And as you can see now, it fell back down a little bit, and Ethereum is now pretty good. Has a good billion over it now. But again, a couple times this year, Ripple has overtaken Ethereum, which is interesting. And I feel like if Ripple overtakes Ethereum for a significant period of time and not just like a couple hours, like it has done a few times this year, then there will be a huge run of of Ripple, because once it takes it and it's got that #2 spot for a good while, then it's gonna, like, sentiment is gonna change towards Ripple quite a bit. Now, Ripple's way different than Ethereum, and in no way, shape, or form are they really similar at all. But people really look at these charts, and if they see Ripple overtake Ethereum, I know, everybody knows that a lot of people are going to start buying into Ripple because they think it's just going to, completely overtake and explode. So that is something to watch out for, because they're so close to each other. And not at the moment, but as you can see in the image here, they were so close, within 100 million of each other, that it's really easy for just a few more cents in price to switch it over. So that's something that's interesting. Another news article today: Apple removes crypto podcast, reportedly ranked #4 in investing from the iTunes store. So randomly. So the podcast, hosted by Morgan Creek digital partner and crypto analyst Anthony Pompliano, off the chain, has apparently been removed from the U.S. iTunes store on November 5th. The podcast reportedly soared to 4th place for podcasts in the investing category in the U.S. iTunes store, but before it was mysteriously taken down, according to a tweet from Pompliano. It says, last week we released a podcast discussing the ultimate argument for Bitcoin. It exploded and ranked in #4 in U.S. investing category before mysteriously being taken down by Apple. We had no warning. We don't know why they took down our podcast, but they can't take down Bitcoin. It's true. The podcast description for the episode that allegedly caused the podcast to rise in popularity last week before being taken down by Apple details that Pompliano interviewed Murad Mahmoudov. Yeah, got it. Described as one of the highest conviction Bitcoin maximalists in the world. The episode hosts a discussion about what Bitcoin is, how it works, the importance of its deflationary monetary system, why all fiat currencies are doomed to fail, yada yada. So as the press time searches for off the chain in the U.S. iTunes podcast store, a prompt on alert from Apple that podcast is currently not available. And as you can see, it used to be rated 14th under the broader business category here, off the chain, and for a while there it was ranked 4th. So iTunes, not liking Apple, once again, not liking anything crypto related. They always take out crypto apps and stuff like that. Interestingly enough, that you can add crypto to a lot of the stock apps for watching stock on your phones, but for some reason they just remove any kind of crypto related stuff from their app store, and now from iTunes. They don't want you having podcasts on there apparently about crypto, because you might beat the man one day. Somebody might beat fiat with crypto and then not buy iPhones or something like that. I don't know. Who knows? But not good, Apple. So another article: how the crypto crash could be good for crypto. So this is something that I've been kind of agreeing with for a while and talking about once in a while, especially in my live streams and some videos a few months back. So these days, cryptocurrencies are far from the rage. Many have lost 80% or more of their market value from their peak in January, even though I would say a lot of the peak was in December, but some of them peaked in January. And some have fallen off the map altogether, but perhaps that development is precisely what we need for crypto to take the next step forward. For context, railroad stocks collapsed after a bubble in the 19th century, but still the railroad continued to transform our world. And not today, though. There's still lots and lots of trains out there, but for the most part, America's railroad system is absolutely horrible, and nobody takes a train to like work and stuff except for the like really really major cities. But to like go across America on a train is really hard because a lot of there's like these sets of tracks, and they're all owned by these different railroad corporations. So like a lot of them are just single tracks. So if there's something transporting something, you have to wait for that transport to go by before you can have your passenger train. And passenger trains actually, even a long time ago, stopped being productive and efficient, and they don't produce much income. So yeah, but either way, I get the point. Internet stocks plunged in the dot-com crash in 2000 and 2002, but then in turn cleaned out the bad companies that paved the way for subsequent tech revolution, including the rise of Amazon and Google. So the history is no guarantee that crypto will take off, but it does show that a price collapse does not have to herald the end of a technology or its relevance. Our problem crypto has had is it's too many junky ideas were tossed around and often funded by ICOs. That is hardly a surprise, given that the asset class went from basically zero to more than 800 billion value at its peak. People will try to get their hands of that share of the pie. Exactly. People will do anything. I mean, fraudsters, ICOs, scammers, people just making a coin just so that they can make money and leave. People making coins so that they can just make money and then barely work on the coin or promise this, that, or the other thing. That has happened so much. So it's led to thousands of white papers, startups, frauds, some valuable innovations for sure. But most of them just not good. You can take a look at CoinMarketCap, and I think you can have it show you the full list. And it actually takes a while to load. It's so big. It literally takes a while to load. It's so big. You can just keep like scrolling down and just like waiting and waiting and waiting. And there you go. So we just have all these coins. And like, what is the point of half of these? Now, for mind you, don't get me wrong. I'm not trying to put all of these coins into one group, because from time to time, there is a good coin stuck in there for sure, and that one that you might use, or one that might end up being really, really great. So I'm not trying to put every single coin in the group, but you can see this list just goes on and on and on. And a lot of these people probably tried to make a coin so that they could make money, plain and simple, and didn't really think about the long-term aspects of it, or have really no intention of actually continuing to create these coins. So, but from an outsider's point of view, it's hard to tell good from bad, with many crypto still has a dubious reputation due to lingering and not entirely accidental connections with get-rich schemes, money laundering, and the drug trade. New markets, including valuable ones, are often abused at first. So, again, it says from an outsider's point of view, it's hard to tell good from bad. Now, let me just tell you from an insider's point of view, I would like to say I'm an insider. I don't know, probably most of us are, because we're into crypto. You're watching a crypto channel. You're probably trading, buying, investing. So we're insiders, right? I guess. Anyway, even from my point of view, and from probably your point of view, it's hard to tell which ones are good and bad. Now, you go to an ICO site, or you go to a coin, you look at their white paper, and it's all just corporate word salad, like blah, 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 nonsense, nonsense, nonsense. And so which one's good, which one's not, when they all say the same thing? And when, months and months go by, they have a roadmap. Oh, yeah, Q4, Q3 2018, we're going to be doing this and that. And then you're like, it's Q3, there's nothing going on. It's Q4, there's still nothing going on. And that just happens over and over and over. So the time has come for crypto to go on a diet. No more easy money. No more thoughts about ICOs leading to quick riches. The rhetoric is shifting towards a more cautious and even apologetic tone. The corresponding reality can perhaps be one of the greatest focus and relevance. So I'm not going to read the whole article here, because it is kind of, that's not that big, but it would take a while. But the idea is that a lot of these coins have to die. They have to die. Look at all the market cap. As you can see, each one of these coins that I'm scrolling by has a $3 million market cap, which isn't much. Mind you, $3 million is really not a lot in the investing world. $2 million, but all of these, $2 million, $2 million, 2, 2, 2, 2, 1, 1, 1, 1, 1, 1, 1, all of them all the way down. And there was a time when all of these coins that didn't exist only could exist in maybe these top 20, 30, or 50 coins. So you could take all that market cap and put them back into here. And if you take all that market cap and put it into Bitcoin and Ethereum and Ripple, the prices go way, way up. But as more and more of these altcoins come out, people say, okay, well, I'm going to invest into that coin. I'm going to invest into this ICO. So I'm going to sell some of my Ethereum. Maybe you have a couple Ethereum and you decide you sell an Ethereum and you're going to go and put it into an ICO. So now you essentially took your you sold some of that Ethereum, you kind of affected the price, and that's happening on a massive scale of people putting in money into this coin, that coin, the other coin, and just hoping that these low cap coins are going to go up. So all that money is sort of shifting to these coins that are just easily made. An ICO ran them, or the developers really don't know what they're doing. They just made a coin and they just said, hey, like, let's see if we can get this to a bunch of money, and then we're going to dump ours, and we're going to make so much. A lot of coin creators, developers, what have you, mass mine the coin beforehand. Now, mind you, I don't have a problem with an ICO or a coin developer taking 10% of their coin. Anything more than that I feel is a little egregious, but 10% is just fine. Because if I made a coin, I would keep 10% of it because it took me a lot of work. It took me a lot of work to put it on exchange, to develop it, to actively seek better technologies and development, and maybe hire a couple people to help me out and integrate it into this, that, all that sort of thing that goes into a coin, and including the partnerships and everything. In the end, you don't want to do that for free. Now, mind you, Bitcoin kind of was because it was the first, but for the most part, I don't have a problem at all with anybody making a little bit of money off the coin that they developed and put hundreds of hours into. And programmed and everything. So that's fine, but a lot of these coins are heavily pre-mined, and they just want them to go to like $1 or something like that, because if they had mined 100 million of them or 200 million of them beforehand, and their shitcoin basically goes to $1 or $10 or something like that, the developers made an egregious amount of money. It's kind of like EOS. I was going to say EOS, but either way, EOS. This company here, everybody knows by now, but they raised $5 billion. $5 billion. They actually raised $4.5 billion, and then or $4 billion, and then through a little bit more through an ICO and through different things. And then some pre-mine. They took some of the coins for themselves, so it equaled about $5 billion. You can see the market cap is only $5 billion. So the developers made $5 billion. And the coin is only worth $5 billion and doesn't really have a lot of uses at the moment. Not a lot of dApps, not a lot of insanely good uses. So $5 billion it took to make EOS, essentially, in a nutshell, to make EOS, when any other developer could have made that coin, or any other set of programmers could have made that coin for $100,000 million or less. Why $5 billion? $5 billion is such an incredible amount of money for something that actually turned out to only be worth $5 billion total market cap. It makes no sense. And so basically we need a purge. And that's going to take the money away from the bad coins and put it back into the good coins. So last thing I want to show you guys today, well, actually, we could talk about CoinMarketCap, because 216 billion, we are slightly moving up, and that's good. So things are starting to look a little bit better. Bitcoin dominance going down a little bit, a lot of money going into altcoins, and starting to go up just a little bit. So we'll have to see if this goes up a good amount and then just dumps, or if we're going to actually have a short or mid, term bull run here. So maybe towards the end of November and the beginning of December is usually a bull run in crypto. Now, I can't guarantee that, because even I don't know. But if you look at the charts, that's typically, and if you've lived the world of crypto, you typically realize that this is about the time of year that bull runs come, towards the very, very end, winter of the year, if you will. So, we'll have to see how long that's going to last. But so far, so good. Not doing too bad. But onto this. This is a picture somebody tweeted, and it says Bahamas bank account targeted for U.S. seizure. So not too crazy. So accounts at two Bahamian banks alleged to contain bribery proceeds from a massive $1.2 billion money laundering scheme. $1.2 billion. Very, very interesting that it's $1.2 billion. Keep that in mind. Money laundering scheme tied to top Venezuelan officials are targeted for seizure by the U.S. government. So basically money laundering to the Venezuelan government. Court documents obtained by Tribune Business reveal that U.S. federal authorities want to seize assets held in bank accounts with Deltec Bank and Trust Ansbacher, if I said that correctly, as part of a crackdown on corruption linked to the Nicolas Maduro-led regime. Very, very interesting. What is Deltec Bank? Isn't Deltec Bank the one that Tether goes through? Absolutely, you would be correct if you would say that. Yay! So you could say you won the Jeopardy final thing, the final Jeopardy. You won. Congratulations. So basically, Tether uses the Bahamas and specifically Deltec Bank to hold their money for Tether. And recently, they just burned over $1 billion in Tether, or that they took it out of the market and put it back into the bank. So $1.2 billion money laundering scheme to Venezuela by the Tether Bank. Oh my God. I don't know. I can't really put anything more together through that because I don't have enough evidence. But wow, wee wah. That is quite the quinky dink. Don't you think? But I hope you guys enjoyed this episode, and as usual, I will see you guys next time.